Yo, what's good? I want to talk about volatility and just what I'm looking at in the markets to try to justify what I should do. So I want to show you something where I have pulled data from 8:30 to 8:45, and I want to say, all right, the first 15 minutes of the market open. What can that tell me? What can that tell me about what will happen from 8:45 to 9 or 9:15? So that first 15 minutes is it. Usually, a lot of people say, "Well, it's crazy. A lot of things happen," and I agree. The speed picks up, volume picks up. There is a lot of chop sometimes, but then there's a lot of striking in one direction from 8:30 to 8:45. So I'm not saying I'm trading that. I'm saying that that should be our reconnaissance. We should look at 8:30, 8:45 and tell us that first 15 minutes. Tell me what usually happens from this. Okay, that's what we're trying to do. So I've got a spreadsheet here, and I scrunch it up because I don't want to see all the data because I want to have myself try to predict the next days. So I don't want to see it. So at this moment, the increments is on column B here. The increments is on column B. The range is on here. And I'll show you what I mean by this right now. Let's take a gander at the day right now. If you take a look at the top right screen, you see daily. I know I'm going to examine 8:30 8:45, but this just for to understand kind of what's going on, just look at the daily. You can see the orange is the volume profile, which is the day times volume, and it also says the range because you can see where it stops and starts. So you can see that the range here is relatively mediocre on the first day. The increment count is on the bottom, which is 23. So that's pretty usual. Then the next day, it's 26 increment count, which is relatively a little bit smaller range than yesterday. Not a big deal. So right now, it's relatively normal. These 2 days are relatively normal. Then the next day happens. It's super tight range, and it's super small increment count. You can see that it's just condensing. It hasn't gone anywhere. The range on the day is exceptionally small. And the next day, what happens? We see an expansive move downwards. The range has gone way, way bigger. I mean, it's 350-point range down 1.5%. Much bigger. I'm not saying it's crazy, but it certainly does not fit in the same box as the previous 3 days. This was an expansive trend day. And I can tell you that if you were just looking at the increment count, which is how many increments of 30 points happened, how many increments of 30 points took place? Up 30, down 30. Up 30, down 30. That's 4 times, right? And price didn't go anywhere, right? In this day, price went somewhere, but it only went one direction, which results in the increment count actually being this pretty similar to what's normal. This is a normal increment count. 28, normal. If you were just looking at increment count, you'd say, wow, well, this should be a normal day. But it isn't. It's a huge day downwards. So what does that tell me? It tells me that the market was trending. It was seriously trending. Okay, and that we can also translate to our 8:30 to 9 o'clock analysis, which we'll get into. So for this one, you see that the increment count is normal, but the day is not. The range is abnormally large compared to normal. And now we see the next day, which has the same range. If we just look at ATR, average true range, we're missing so much because the range is the same thing as the day before, but the increment count is nearly double. Increment count is another form of volatility, of looking at volatility. And I checked the volume on this day versus this day. You can see that one with the higher increment count has much higher volume. So the reason I bring this up is that, well, this is identifiable. Something that is expansive range with smaller increment count or relatively decent increment count, meaning, oh, what's that word? What is that word? It's a definition. Sorry, I gotta find it. It's not in the same proportion of. Synonym for not in the same proportion. Incommensurate. Incommensurate. Commensurate. You guys got to learn this word. Commensurate. Correspondence in size or degree. Commensurate. So, the increment count is not commensurate with the range. If the range goes greater, we should see a larger increment count, just like this day, in proportion to, in commensurate to, but it's not. Okay, that's an identifiable that's something that we can identify. So let's go take a look. Man, this thing is trending up right now. It is pushing. But all right, let's take a look at what I'm looking for. I'm looking for a range that is large, that is expansive, that's normal or much more than normal, and I'm looking for the increment count to not be commensurate. I don't know how to use that word yet. It's not in proportion to its excellent range. So let's take a look at January 27th of this year. And we see a range, and the colors correspond with it. So you really only have to look at the colors right now, because I really did make the colors as an indication. I customized it to make it, all right, the big ones are green, okay? So you can see that the increment count is much larger than average. The average is 20. This one's 37. And the range is 75, but the average is 65. Really, the range is not that big, okay? It really isn't. The increment count is huge. So what that means is this one, where the increment count is, excuse me, it's actually not the same day. This we haven't seen. I'm just trying to predict this, okay? I'm showing that the increment count is large, but the range isn't following through. What does that tell me? It means it's going back and forth. It means it's going back and forth with some violence to it. And we can see that 3R, we can see that from 8:46 the following 15 minutes. So this is 8:30 to 8:45. We see high increment count. The range is not really commensurate to that. It's not that big of a range compared to the number of increments that's happened. We see that means, in general, it's going sideways, hardcore sideways. And we see the following 15 minutes just completely say the same thing. We have it's mean reverting. It's mean reverting for that period of time. And if you did the entire time, it mean reverted the entire time. So basically, the first 15 minutes of the market is chop, hardcore chop. The next 15 minutes after that is following suit. It's following suit. And you'll see that is the common occurrence here. The next day happens to be the opposite type of day, okay? January 28th was something that was with very large range. Okay, I wouldn't say very large, but definitely larger than normal. I didn't do standard deviation, but it seems like +1 standard deviation at least. It's very large, okay? The average is 65. Range of that first 15 minutes, now it's a 90. Okay, it's large. But the increments you can see is wildly small. This would be the same day or same morning session, whatever, 15 minutes, as this day, where we have a huge expansive range with a low increment count. The same thing here, huge expansive range with a low increment count. What does that tell us? It tells us that the market was directional, okay? It was choosing one direction. Regardless of the direction, I don't care. When the market's directional, we should not bet on mean reversion. We should not double down on losers. We should bet on a direction. It doesn't necessarily matter because it can be directional the other way. I'm just saying it is going to be directional, and we should play a stop and reverse. That's what I would do. We're going to do a stop and reverse, and we're going to trend. And in the scoreboard of what happened in the following 15 minutes after we receive this data, we can say, all right, what should we do? Let's trend it because the market's clearly directional. Let's trend this market, whichever direction it wants to go. Doesn't matter to me. And you see that you'd make 22R in 15 minutes. And if you trade the entire time, it does taper down to 15R. So you obviously lose more money in the following 15 minutes after. Sorry. The first 15 minutes is our reconnaissance. The next 15 minutes is our trade. But I did also say, what if I traded the next half hour instead of just 15 minutes? And you would not make as much money. The first 15 minutes of trading. Right after the first 15 minutes of the market, I know it's confusing. First 15 minutes of the market is reconnaissance. Then we make our judgment of what to do. We want to trend the market because the market's trending. We want to follow suit. And that's what we should do in the next following 15 minutes, and it makes money. So that's one thing that I wanted to show is that essentially I didn't know if the first 15 minutes would be something that says we should do the opposite of the first 15 minutes. Like for this one, I would assume that this would trend because it's high increment count, which shows that there's a lot of enthusiasm, yet price didn't really go anywhere. So I'm thinking, well, price is not really moving as it should because there's more power inside of it right now because there's so much enthusiasm, volume, increment count. It's moving a lot, yet it's not going anywhere. I'm going to bet that it's going to trend and go somewhere. The answer of that is false. That is false. What I just said is false. Okay? We should actually just follow the market. The market clearly doesn't want to go anywhere. Let's bet on it not going anywhere. And it sucks, but I think that's what we should do until it tells us otherwise. Obviously, we could start betting mean reversion and something happens and it triggers everything. You could lose mean reverting. It's obvious, it's not a guarantee. We could get caught in a transition period from mean reversion to a trend period, and that happens. But we shouldn't bet on that happening until we see evidence that it will. And at this point, the market has given us no evidence that it will trend. So we shouldn't trend. The next day, it shows us all the evidence in the world that it's going directionally. So we should trade directionally and trend this market. I haven't done an analysis on super small range, super small increment count. It just seems like it's very, very low energy. Maybe you can just mean revert the next days or the next 15 minutes. It looks like it is. Like this 5 and 15, those are really, really small increment counts, yet you make money mean reverting the next, barely any money, but there's very few trades anyways because it's so low energy. It doesn't move much. The next following 15 minutes from 8:45 to 9, you get that trading window. You make money mean reverting if it's low energy. You make money mean reverting if it's low energy. Let's see, another red. All of these are red, and you can see it's mixed. There's some mean reversion, yet sometimes you just find a trend. It finds direction in the following 15 minutes after the open, and shit, you lose. So I don't think that's as conclusive as something as, say, a range is high, but the increment count is low. You'd want to trend this market. In general, you'd think trends. This one doesn't happen to work. 20 and 120. The first 15 minutes shows us very big range with very directional range, and then the following 15 minutes actually pauses. But then if you did the following 30 minutes instead of 15, you get that trend again, and you make 18R in the total. But you lose 6R in the first half of your trading until you find trends. That's what ends up happening. Let's keep going. This one's wild. Look at this. It's literally, the range is 105, which is crazy big compared to 65 is average. 105 is abnormally large, which is why it's so green, yet the increment count is so small, which means it literally only went one direction. It's very directional. It did not even breathe the other way because the increments haven't. Otherwise, the increment count would have to move. Because we're doing 10-point increments and this is 105 range. So it pretty much only went one way. So what does this tell us? Again, it tells us this day, and it says it's trending. That's what the market's doing. And what ends up happening, the following 15 minutes, it does trend. You make 27R in 15 minutes trending. Make 54R in the next 30 minutes trending. Yeah, big boy. Yeah, but we're going to go to the library now. We're going to go. All right. So that's very interesting. I think there's something we can do to compartmentalize a trading strategy just for literally 15 minutes. And I would do it automated because you can choose. I'll have it optionable. Like choose, I'll input it. I'll be there in 8:45 when it starts, when the trading begins. But I will say like trend yes or mean revert yes. That's it. It's it. That's simple. And it'll tell us, or it'll commence trading for those 15 minutes, and we should get these same results. But we have to do the analysis on what to do under which situation. And if we have all this data and data doesn't lie, we can try to predict it. So this is definitely premature yet, but it is something that I'm going to look at. It's hard to keep one thing at a time in trading. Don't quite know how I'm going to organize this. Like I need like a freaking assignment notebook to do this. And I have multiple, but there's just too much crap. Like I've tried to do this, but there's just too much sometimes. But yeah, we'll go library. All right, we're going off to the library. Peace and harmony. Peace and harmony.